We've got Rajesh Kothari, who's Managing Director at AlfAccurate Advisors, joining us on the show now to take us through a fundamental view on the markets. Rajesh, how are you viewing the market at current levels? Would you be buying at these levels?
We are overall positive on market, from current levels. Basically, if you remember last time, I think we discussed about, about 1 month back that below 5,000 Nifty levels, I think we should be adding our positions. We are still near to that level, plus minus 40-50 points. And I think in the current year, probably you would see about 15% upside to the market in FY13 compared to what we have seen during the last fiscal year. The reasons why we are positive on market are first and foremost few macroeconomic indicators, and I think inflation and interest rates both are going to be the large supportive factors to the equity as an asset class compared to the other asset allocations. So I think earnings growth because of two macro factors is also going to be much better in FY13 compared to FY12. So say for example in FY12 we had a Sensex earnings grew by about 8.5%. We expect that FY13 you will see double-digit earnings growth. So momentum in earnings growth is going to be better, maybe at around 12 to 13 to 14%, and therefore this combination of these two factors will see to it that we also, from market perspective, we get about 15 to 20% upside. And one more interesting thing which I must share with you is that typically we have seen that whenever the markets are range bound, say about plus minus 10% kind of a range of the major benchmarks, then many stocks, individual stocks, they do offer probably sometimes 30 to 40% upside as well. So if you see historically, in FY07 and even a year before that, when market grew by only about say 14-15%, but 40 to 50% of the market it delivered 30 to 40% returns. So I think in a range bound market about say plus minus 10%, a lot of stocks has a huge opportunity to make about 30 to 40% return. So in net, these are the reasons why we are positive. Of course, one of the major factors is going to be the government policy factor, which people have, I think people have completely written off the government policy, and even the global articles, whether it is Financial Times or Bloomberg or any global magazine, they have talked enough about negativity about Indian policy paralysis from the government perspective. But I think that's where we have some hope from the government. Last time I was mentioning about few baby steps which government is taking, and after that government has took one step of changing the fuel prices. So I think you will keep hearing small changes, but these small changes together will help, which will give the probably signal to the global investors as well as the local funds and insurance companies that yes, we might be slow, but probably it's going to be one by one positive things. We are in the right direction.
Right, Rajesh, just wanted to get in a view on the banking sector as a whole, because it really does seem that the clamor for a rate cut has already been priced into the markets. How do you believe the banking stocks are likely to pan out, and would you be a buyer at these levels?
We are positive on overall banking and finance as a sector. The problem in banking and finance sector is less about the interest rate cut, but more about the asset quality issues. And I think on the asset quality issues, probably we have seen the worst of asset quality in last third quarter and fourth quarter. In first quarter, you might continue to see some more assets which will go for restructuring, particularly from the ACB's perspective. But going forward beyond first quarter, we will see also the NPA will come down. Both gross NPA will come down, net NPA will also reduce, and you will also see less restructured assets. So I think this asset quality change from worse to better, I think that will help for price to book ratios to improve, which all are trading right now at or below probably 1 time to probably 1.2 to 1.3 times, which it used to trade given the ROEs of PSU Bank, which is around 15 to 19% depending upon different banks. So net we are positive on banking and finance as a sector.
And what about the cement space, given the overhang in terms of the demand-supply mismatch, enhanced capacities, and in light of the monsoon season coming in, would you be positive on that sector?
Cement, I think, we are right now having kind of a neutral view on cement. We are not very positive and we are not very negative as well. We are waiting for valuations to correct a little bit, for us to buy the cement stocks. Generally, we are positive on cement as a sector. but from valuations perspective, I think probably you might get it cheaper, and if it gets cheaper, then yes, then we will buy. Otherwise, probably at current levels, we will not do much on the cement sector.